coming from a rather technical conversation to one which is less technical, safety. And quite naturally, a lot of conversation is around how do we make this space safer. But before we even jump into that, maybe just like 2 minutes, just very quickly give a sense of who you are. And I know they've given a title, but what does that actually mean? And then we can obviously go into some context around what safety is looking like in your perspective.
Yeah, absolutely. Thank you for having me, Brian. My name is Miriam Kiwan. I'm the Vice President for Circle Middle East and Africa. My mandate is to really invest and expand what Circle does across the region. Circle is a global fintech company that moves money at the speed of the internet. We're probably better known for being the issuer of USDC and EURC. USDC is the largest regulated stablecoin in the world. And we're very excited to be expanding here. In fact, we just announced our incorporation in ADGM yesterday.
Yep, and that was exciting development. I think so when it comes to safety, a lot of people will inevitably start to think about, is it a problem? And obviously people around the room, when I think about this, some of you may be using blockchain, some of you may be thinking, actually, should I be using it more? Am I concerned about what happens to me? There are, just recently, just even this week, Bloomberg was reporting about various scams and concerns that come from how easy is it for individuals to use these capabilities without falling victim to nefarious activities. So I guess one question is, given your domain, looking at this region and obviously the wider Circle perspective, how similar, different do you see the nature of concerns, the scams, the type of activities that are happening in the digital asset space?
I think it's important to start by sort of highlighting the fact that blockchain has a transformative potential for the Middle East and Africa. I think it's a very important part, and that's why the UAE is focusing on this, as well as AI. And probably to give a simple example, because when people think about blockchain, they don't necessarily sort of connect it with many different sectors. I could use our space. So if I take the example of the use of digital currencies on the blockchain, especially with regulated stablecoins, they have the potential to improve the speed of transactions, reduce the cost, as well as improve efficiency and transparency, which is extremely important. The reason why I'm saying that is because it's a different layer on the top of blockchain, which really focuses on utility rather than sort of just having a technical platform. When it comes to the safety of blockchain specifically, I think in my mind there are three key factors that influence sort of the safety of blockchain. The first one, of course, is the regulatory environment, right? If I take this region specifically, between Middle East and Africa, I think of outside of the GCC, more specifically the UAE, the region still needs clarity when it comes to regulatory frameworks, legal frameworks that would foster innovation in the space, would actually endorse the development of the blockchain space. I think with the exception of the UAE, which has done an extremely good job in terms of developing very clear boundaries and guardrails around what does regulation look like as for the safe use of blockchain technologies, as well as sort of removing the risks that are associated with fraud, associated with human error, etc. So ADGM is one of those regulators, and I think this removes the risk of potentially having fraudulent activities, etc. I think what remains to be seen in the UAE and the region is harmonization of regulation. I think this is what exposes probably some of these use cases when there are no clear guidelines or regulatory frameworks that actually force the players in the market to follow those, to follow a compliant way of doing business on the ground. We tend to see more of that. I would say in UAE, we probably see less of that now. Maybe that was an exception. And again, this is probably linked to the bull market again. I think we see a lot of stakeholders coming back into the market. However, if I look outside of the GCC, specifically in Africa and the rest of the Middle East, Africa tends to have a lot more of that. I think we've seen a few cases both last year and earlier this year on this. So regulatory environment is very important. The second factor, I think, is around technology development and infrastructure. Again, the region is not equal, very fragmented. You have the GCC. We're blessed to have a very well, so a progressive, I would say, government, an environment that fosters innovation, that focuses on digital transformation, etc. Unfortunately, that's not the case outside of the GCC. Again, if you look at probably the rest of the Middle East and Africa, you have poor internet connection, you have sort of really poor infrastructure that would even enable players in the fintech space to try and build. So that hinders, the growth of the industry outside of the GCC. And that ultimately impacts important areas for our region, which is around financial inclusion, right? As you probably know, we have over 2 billion people who are either unbanked or underbanked. Majority of them are actually sitting in our region, right? And blockchain, as well as digital currency, provide them with a fantastic alternative to the traditional financial system, but without the ability of building sort of a blockchain ecosystem that can actually run on the Web3 economy, where both businesses and users have the opportunity to have full control of their financial destiny, but also have access to global markets. So imagine an African business or Middle Eastern business that can actually onboard onto the Web3 economy. They can do business with anyone around the world. They can be more competitive. They can actually ultimately impact the economic developments of their markets, right? And the third factor, again, is around probably economic instability. Again, linked to probably the second point that I mentioned. When you have a lack of regulatory environment, lack of clarity, lack of infrastructure, what we tend to have is sort of bad players coming into the market. Why? Again, because it's linked to financial inclusion, people who are facing hyperinflation, devaluation of their local currencies, that are looking for volatile digital assets, basically, to save, to store value, right? So instead of going to, I would say, probably USDC, which is very regulated, safe, etc., they end up investing in volatile assets that are not backed, they're probably not safe, which creates ultimately another issue within that environment.
Oh, certainly. I mean, I think about it, it's not a homogeneous. When I think about the area you cover and just obviously the global market, certainly, as you pointed out, you will have attempts at fraud. That's not new, but certainly, as you pointed out, the regulatory environments are quite different. The infrastructure, the safeguards, and the economic incentive to act in that way is obviously of interest for people who are looking to carry out illicit activity. But then one of the things you pointed out as well is people are looking at this as an alternative to be able to either earn, save, hold, or even actually just access global financial services. We can't, ignore the fact that there's been quite a run-up in the digital assets market over the last couple of months. Maybe it's linked to certain jurisdictions, maybe favoring the outcomes for pro-crypto. Bitcoin just crossed 100,000 US dollar more recently, and it's kind of oscillating at that number. Do you see that as a more speculative interpretation, or does it actually reflect maybe the market is actually more, there's a lot more safety, a lot more certainty, a lot of the engagement that's happening is from that perspective?
It's a little bit of both. I think we're probably, if you asked me in 2022, my answer would have been very different. Whereas today, I think we're probably getting to a point where we are onboarding large institutions into the space. So there is a combination of trust that's being built with Bitcoin, but also ultimately, I don't think it's only that. I think there are three areas here: speculation, definitely, market demand, and also macroeconomic drop, right? So backdrop of what's happening. It plays a role in building trust around sort of the blockchain, but ultimately it's not only that. In contrast, if I take, for example, stablecoins, and I'll give you, an example of how it was 3 years ago compared to now. Stablecoins are more sort of play as more of a stable sort of asset that people can store a value in, they can transact in, etc. If I take the case of Turkey, for example, and Nigeria a few years ago, I remember people used to store value or transact in BTC, whether that's a B2B cross-border payment or, storing their value, they used to sort of buy BTC or ETH to do that. Today, if you take these same markets, the majority, sort of the largest proportion of the market are stablecoins. Why? Because it provides a dollar-pegged, in the case of USDC, asset that is safer, that's less volatile, that's regulated. I'm only referring to regulated payment stablecoins, and that sort of changes. So I believe stablecoins probably are more responsible for building sort of trust compared to probably the volatile digital asset. It's getting better, but I don't think we're there yet with various virtual assets.
Okay, so I see. So certainly the risk profile of these assets is quite different. So obviously you have the regulated issued tokens, as you've mentioned as well, in the case of USDC. So if we just use the last couple of minutes that we have, looking ahead, you obviously have some technology capabilities that are coming through. People talk about things like zero knowledge proof and various other capabilities that are providing privacy protection and ways in which more safety guards can be locked in to these digital asset ecosystems without necessarily relying on the individual to have the knowledge and sophistication. From a Circle perspective and from your own view of where where the puck is going, what does that look like? What are some of the perspectives, whether they're regulatory or non-regulatory, that you think would be helpful to build some of that safety?
All of the ones that you mentioned, so the having a robust compliance process. So for us as an issuer, we take regulation very seriously. We always go from the front door in terms of really having discussions with regulators, and we've done that with ADGM and the central bank and other regulators. But we also implement a very robust compliance framework where we have strong KYC, AML processes to make sure that we avoid any sort of risks to protect our partners and users. And I think ADGM is doing exactly the same thing in a way, sort of you monitor, in a way you sort of regulate issuers, whether you regulate the custody element of the issuance and distribution, for example, of digital asset, is a very important element. I think moving forward, I don't think we have a choice where you're not regulated. It's either, there is no excuse anymore. In the past, I would say in the past few years, people would say, well, we don't have the regulation in place, etc. That's no longer the case. If you look at the, again, central bank with the recent issuance of the stablecoin sort of framework, including sort of the market consultations that ADGM have issued to really upgrade and make sure that they are up to speed with the technology developments, whether that's around AI, whether that's around sort of the custody or DeFi even, I think the regulators are no longer just trying to catch up. They are really sort of getting ahead of the industry. And that, for me, gives me sort of the comfort that I think we are going to see more players sort of, playing within the regulatory sort of environment rather than sort of staying outside of that.
Fantastic. Out of time. Thank you very much, Miriam, for your insights and the sharing that you've given to us this afternoon.
It's a pleasure. Thank you so much, Ryan. Bye.